Hello, and welcome back to another weekly Forex analysis. Now, in today's episode, we want to look at three financial instruments, namely GBP USD, Euro USD, and gold. First of all, we'll start off with GBP USD, and we want to get to the daily time frame to know what the daily time frame is saying. Now, this is the daily time frame of GBP USD. Now, as you can see on the daily time frame, like we have been saying, we have been discussing about this pair for quite some time now. Now, price converted from bullish structure to bearish structure at this point, okay, and close below it, and that becomes our chalk in the market. Now, after chalk, we want to start looking for bearish opportunities, and as you can see here, this is the low that created the inducement. So this is our inducement in the market, and confirming with that inducement, it confirms this low as a valid low in the market. So this is our low in the market, and now remember, this is still our high here. So I've told you that between this high and this low, there are only two OBs that work, and those two OBs are simply your DOB and your EOB, and we identify this as our DOB. After inducement is your DOB, all right? And as you can see, price came to that DOB, and this is our extreme OB, like I told you about in our previous episode of our weekly Forex analysis, okay? And I said price is free to travel up all the way to this EOB. This is your EOB in the market, guys, and this one is your DOB. All right, and I told you that your DOB is a low probability zone, and as you can see, price tapped into that DOB and came down, and we look at it that, okay, so where do we want to take this trade? I told you in our last episode, all right, that this was our demand zone that we look to take trades from if price comes to that point and take this market higher to this EOB, that is your extreme OB. All right. Now, as you can see, price did not tap into this our demand zone. Now, but price reacted off of something on the lower time frame and then moved higher to nullify the validity of this DOB. All right. Now, let's get to the 1 hour time frame and see what actually happened there. So this is our 1 hour time frame now. As you can see, let us look at what is happening here. Now, this is your 1 hour time frame. Remember, that's your DOB, and this is your extreme OB, which is your EOB. Okay. Now, let's look at what happened here. Okay, so now take a look. This is your 1 hour high. Why is it your 1 hour high? It's your 1 hour high because price took out inducement somewhere here. So inducement was taken out there, confirming that high as a valid high. So that high is your 1 hour high. And after your 1 hour high, what do you expect? You want to look for DOB, all right, on your 1H. And where is the DOB here? Now, where is the DOB here? Now, the DOB is here, right here, as you can see. Now, I've told you that this is your order flow. The first thing you need to understand is your order flow. Very, very important for you to understand that. Okay, your order flow. I've told you this is your order flow in the market. All right. From that point, this is the last selling pressure before the up move. And so that's your order flow in the market. And as you can see, price came tap into that order flow. All right. And reacted. It tapped into that order flow and reacted and went up. Okay. And when price went up, what happened? It took out this very structure high here. It took out this structure high. Okay. It took out that structure high, and that is known as your BOS, break of structure. Okay. And now after break of structure, your low is confirmed. That is, this low is confirmed. So this is your low. Let me just indicate that for you to know. This is your low, your 1 hour low in the market. All right. And this is your 1 hour high. Okay. So after that 1 hour high and this 1 hour low, what happened? Now take a look. Price now created this high. For this high to be confirmed as a valid high, it has to take out inducement. And where is your inducement here? Well, your inducement here is this one. This is your inducement. And as you can see, it took it out. Okay. So when it took out that inducement, your high is confirmed. And where is that your high? Here is your high confirmed. Okay. And after your high is confirmed, price travel back down. Okay. When it travel back down, what happened? Now price has to take out this high for this low to be confirmed. So as it is now on the 1 hour time frame, this high is yet to be taken out. Okay. So what are we expecting now? Now, when it took out inducement, where is your DOB that you're expecting this price? All right. If it continues to come down to take out. Now, again, remember your 1 hour order flow is here. This is your 1 hour order flow. You need to pay attention to that. Okay. And so if price comes to react off of this order flow, then we'll be more than happy. If you get to your lower time frame, you can refine this order flow to what you want. All right. Now that is your order flow. And remember, this is your 1 hour low. All right. It's your 1 hour low. And after this order flow, which serves as DOB, this serves as 1 hour DOB. Where is your extreme OB here? Now take a look at this. If you start from the low here, this one is already mitigated. It's already mitigated. Can you see that? Now, once it has been mitigated, you cannot use it. Now, what we can do is to now shift this OB to this next candle here in order for us to have, no, we cannot shift because this is a master candle. This one is an inside bar. As you can see, it's an inside bar. This has been mitigated already. Okay, so we cannot use that. Now, the next one we can use is this one. This is where we can use this one. All right, because this is an order flow as well, this one. And this order flow is yet to be mitigated. Where is it? This is the high and here is the low. That is your order flow. Okay, so that's your extreme OB. Okay, so now within that order flow, you can now refine to have this order block here. As you can see, this is an order block. Inside this, your order flow here. Okay, so this is where you look to take trades from. These are the two areas. This is your decisional OB on the 1 hour time frame, and this is your extreme OB on the 1 hour time frame. Okay, everything has been mitigated here. Now, remember, we still have this daily time frame point of interest here that we can look to. All right. So if these two OBs failed here, then we'll be looking at this daily time frame point of interest. All right. So I want you to understand that you should know that this is an internal structure low. This is not your main low. Okay. So that is the picture on the GBP USD, both on the daily time frame and the 1 hour time frame. Okay. So we want to look at how price is going to react. Now, take a look at this. If you look at this, now price took out this very low here. This low here, okay, is a major structure low. This one is a major structure low. And I'm going to tell you why it is a major structure low. It's a major structure low because price took out this inducement here to create a high. All right, it created a high. Remember, when price came, price, look at this. There is this point of interest here. This one, this your wick is a point of interest. All right, you can use it as your point of interest. And as you can see, price now came to react off of that point of interest. As you can see, I want you to understand that. So now price has tapped into that point of interest. All right, because when it took out this low, it took it out with a wick. So you could have gone to your lower time frame like the 5 minutes and take trade that goes higher to tap on this very OB here. And so what are we expecting? We are expecting price to start dropping to get to this point or to this very point of interest here. All right. If this 2 point of interest fails on the 1 hour, then we should be looking at this extreme OB on the daily time frame. All right. So that is the picture of the of GBP USD on both the daily time frame and the 1 hour time frame. So let's quickly get to Euro USD and know what price is doing over there. Now, let's first of all get to the daily time frame and get an idea about the overall structure of the market. Now, this is the daily time frame of Euro USD. I'm not going to waste time on this at all. Now, take a look. This is the daily time frame of Euro USD. As you can see, this is the last structure low, higher low before this higher high. And price took it out, and that becomes chop. It closed below it. And after chop, we are looking for a bearish structure. Price has been converted from this bullish structure to bearish structure. Okay, now we want to look at where we have inducement, where we have some structures in the market. Now, as you can see, this is your low and this is your high in the market. All right, now why is this a low? This is a low because it took out inducement, and after inducement, guys, I want you to understand that this is not your DOB. After inducement is your DOB, but this is not your DOB. Why? If you look at this candle, this bearish candle, the low and the high of this candle is protected or are protected. All right, so every other candle inside is called inside bar. All right, I want you to understand that. So this is not a valid pullback. So this is where a lot of traders get confused. This is not your DOB. This is SMC, smart money trap. All right, your true DOB is this one here. This is it, because everything is mitigated here. This one is your DOB, and then this one is your EOB, your extreme OB. Why? Because for an extreme OB to be very effective, liquidity has to be taken first of all. And as you can see, this high acts as liquidity. All right, now why did we mark this as our extreme OB? This is your actual OB, but after this actual OB, if you look at it, this third candle has mitigated it, so we transfer it to this next candle. So this is your EOB and this is your DOB. All right, on the daily time frame. So we are expecting price to go tap on this DOB and give us any reaction before going lower. Now, but before then, take a look. Price took out this major structure low was taken out here. All right, this is internal structure low. This is internal structure low, but it's a major structure low in the internal structure. All right, this one was taken out, and then this becomes a valid OB. This one is a valid OB. All right, so we said price could have come to this valid OB and now react off of it. Okay, now after this valid OB, look at the structure of the market here. Let me just show you something here. So I wanted to show you something on this daily time frame. Take a look. Price printed this high, then came down and printed this low, and went back up and printed this high and came back down to this low before going back higher. So we are looking for price to now come and take out that inducement. And where is the inducement here? This is your inducement here, guys. I want you to understand that. That's your inducement in the market. And so if price takes it out, okay, this is your IDM. So that's the structure of the market now. Let's take this one out. So that's the structure of the market. That's your inducement in the market. This one is your inducement. So when price, two scenarios can happen here. If price takes out this inducement, all right, then it will come to this extreme OB here that we marked. All right, that's on the daily time frame. Why is it? This is not your OB, guys, because this OB is already mitigated by this. All right, and so therefore this is your OB here now. But we can mark this as your order flow. This one is your order flow here. You can as well mark this one as your DOB. All right, because this is your order flow in the market. Okay, now after that order flow is this extreme OB. Okay, so price can tap on any of them before going higher. That's a picture on the daily time frame. But let's quickly get to this 1 hour time frame and see what the 1 hour time frame is doing. Now, this is your 1 hour time frame of Euro USD. All right, but first of all, let's mark some structures. Remember, this is your DOB on the higher time frame, and this is your EOB, your extreme OB on the higher time frame. Okay, now let's look at what is going on here and mark out some structures. Okay, so this is your structure in the market on the daily, on the 1 hour time frame. This is your high. Why is this your high? It is your high because price has already taken out inducement, and I'm going to show you that inducement now. So that's your high, And as you can see, price closed above it, and that's your break of structure. Why is that your high? It is your high because price took out inducement here. Take a look, your inducement here. Price took out this inducement to confirm that high as a high, okay? But remember, that is your 1 hour high, okay? That's your 1 hour high. And after taking out that high, what happened? Where is your 1 hour low? Well, your 1 hour low is here. This one is your 1 hour low. So if price takes it out, this is your 1 hour low. I want you to understand that's your 1 hour low, and this is your 1 hour high, okay? So these are your lows and high. And after then, what happened? Let's look at it. Price went up, and for this high to be confirmed, it has to take out inducement. And where is inducement here? Your inducement is here, guys. Look at your inducement. So it took out that inducement. It took out that inducement to confirm this high. So this high is confirmed as a higher high. This one is confirmed as a higher high. All right. And after that inducement, look at what happened here. Your low cannot be confirmed yet until price takes out the major structure high and close above it. And as you can see here, look at what happened here. Price failed to close above. This is not a valid break of structure. All right. As far as we are concerned at RALLYTOP, this is not a valid break of structure. This is liquidity grab. All right. And therefore, because liquidity has been grabbed here, everything will be transferred to this point. So your high, your new high, is now transferred from this point. So your high is transferred to this point. All right. That's your new high. Okay. And therefore, this will become your break of structure once price closes above it. I need you to understand this perfectly well. So now your high is transferred. Your inducement is also transferred from that point to this point here now. This is where your inducement is. I want you to understand that. Now, so after that inducement is your low, all right? And so inducement is taken and your low is confirmed here. This low cannot be confirmed until it takes out major structure high. And as you can see, it took it out and close above it. So that becomes your break of structure in the market. All right. And so this becomes your low. This one becomes your low. All right. So this is your low in the market. Your 1 hour low, that is. Now remember that this is your daily time frame inducement. Your daily time frame inducement coincides with the 1 hour low. All right. And as now we can look at what is the possible scenario here on the 1H of the Euro USD. Well, the possible scenario is that, first of all, inducement has to be taken because price has closed above. All right. So inducement has to be taken. And where is the inducement? Here is your inducement guy. So this inducement has to be taken. Once that inducement is taken, then we can now begin to look for decisional OB and your extreme OB. Okay. Now remember, when price takes out this inducement, two scenarios can happen here. Number one is that if it wicks below it, if it wicks and closes above it, and then gives us TNCP, we will be more than happy to take trades higher. All right. To where? To this DOB. If this DOB fails, then we go to the extreme OB on the daily time frame. All right. Now after that, we have this this point of interest here on the 1 hour time frame I'm talking about. I want you to understand that it's on the 1 hour time frame. Okay, so that's your 1 hour time frame point of interest that you can look to take this trade. If price closes below this inducement and taps on this 1 hour time frame, which you can refine on your 5 minutes, then you can take price higher. I don't want to waste time on this at all. Okay, but remember, this is your daily IDM. So if price takes out that IDM and closes below it, it doesn't mean that price has changed direction, all right, on the daily time frame. It's just taking out this inducement and then might come to this decisional OB or the extreme OB here. All right. I hope you understand what we're trying to say. That is the picture on the daily time frame and on the 1 hour time frame. So quickly, let's get to gold and see what gold is holding for us here. Okay. Now this is gold. First of all, let's get to the 1 daily time frame of gold and see the general picture of gold so that we can know what to do here. Again, I don't want to waste time here. All right. Now, as you can see on gold, As you can see on gold, price tapped on this extreme OB and went higher. And when it went higher, all right, it created, let me remove this thing so that it doesn't confuse you. Let me remove everything here, okay? We have been discussing about this pair for some time now. Now, price tapped on this extreme OB and went higher, printed this high, and came down and printed this low, went back up to take out this high. Now, for this high to be confirmed as a valid high, it has to take out inducement. And where is your inducement here? This is your inducement, guys. All right, this is your inducement. So price has to take out that inducement to confirm that high. And as you can see, inducement has been taken out, and therefore this your high is confirmed as a valid high. Okay, now when it confirmed that high, so what happened now? Well, after that high, price closed below it. All right, but after your IDN, where is your decisional OB? Well, as you can see, this is your order flow. I've told you, order flow is very important in the market, so you must understand that. This becomes your order flow in the market. This one here, this is your order flow, okay? And as you can see, price came and tapped on this order flow. Can you see that? Price tapped on that order flow and reacted. Now, this is your extreme OB, all right? This is your extreme point of interest, DOB. This is your DOB, and this serves as your, this serves as your DOB. This one is your DOB. This is your DOB. And this is your EOB, your extreme OB. Only two OBs work here, I've told you. And so when price tapped on this DOB, price reacted, all right, and started going higher. So that's the picture on the daily time frame of gold. But let's get to this 1 hour time frame and see what the 1 hour time frame is doing. Now, this is 1 hour time frame of gold. Now, as you can see, this is that our daily time frame order flow. As you can see here, is our order flow here. And as you can see, price tap on that order flow and start moving higher. Now, but let's look at this. Remember, this is decisional OB. Is decisional. Your extreme OB is here. All right? I want you to understand that. So, because price may likely not hold this decisional OB, but if it holds, fine. If price goes higher. Now, but first of all, let's look at this. All right? Let's look at the structure on the 1H time frame of gold. Let's first of all see the structure here. All right? Now, the structure here is this. Take a look at this. This is a high on the 1H time frame. All right? This is your high on the 1H time frame. And I'm going to tell you why that is a high. That's a high. Why is it a high? It is a high because it took out inducement, and your inducement is here. Your inducement is there on the 1 hour time frame. And as you can see, inducement has been taken. So this high is confirmed as a valid high on the 1 hour time frame, that is. Okay, that's your 1 hour time frame. All right, high. And then price close above this very major structure high here. And once price close above, what do you call that? That becomes your break of structure in the market, guys. All right. This is your break of structure. So we must denote that this is your BOS, BOS. And after that BOS, look at it. Price now create this low. This is the deepest low in this case. All right. This is your low on the 1H time frame. All right. Now, after that low, price created this high. All right. Now, remember, this inducement had been taken, all right, on the daily time frame. This is the daily time frame inducement. I want you to remember that, and it has already been taken. Okay, it has been taken. And so we have this high. And for this high to be confirmed, it has to take out inducement. And where is the inducement here? This is your inducement in the market, guys. This one is your inducement. And as you can see, it took out that inducement. And once that inducement has been taken, that's your 1 hour inducement is taken. This high is confirmed. So this is your high now in the market. This is your new high. It's your higher high. All right. So now after that higher high, price took out this inducement. Remember, this is your major structure low, daily, 1 hour time frame major structure low. And remember, price has already taken out daily time frame inducement here. Okay, so when price now we are bearish on the 1H, and price now came into this higher time frame point of interest. All right, when it came into this order flow, the higher time frame order flow, now take a look. Once it taps into this order flow, you can refine your order flow and get the precise point. But as it is now, when price tap on this order flow, this is the last low here. And remember, your first pullback after it tap on the higher time frame point of interest is your chop. And therefore, when it takes it out, it becomes a chop in the market. So that is your chop. That is confirmed as a chop. All right. Now, after that chop, what happened? Now, take a look at the way price took out this low here. How did he take it out? Let's see. Let's see how he took it out with the candle closure. Can you see that? So you need inducement. Now, there was no inducement here. The inducement we had is here. And the price didn't come to take out that inducement. This is the inducement that is supposed to have been in the market. Because without inducement, you don't need to take any trade. So this would have been your inducement. But as you can see, that inducement was not taken out. It wasn't taken out before price created a new structure. And therefore, because it has created a new structure, our inducement will be transferred from there to here to confirm this high. As you can see, this high too did not come down to take out this inducement and before creating another structure. And when it created this structure, all right, where is the inducement? Remember, this high, this candle's high, look at it, look at it. This is just one straight leg. This is the candle high and this candle low is protected. All right. So therefore, your inducement still remain here for this high to be confirmed. And as you can see, price didn't come down to take out that high. And before you know it, it created a new structure entirely. This is a new structure for this high to be confirmed. Our inducement has to be taken and the inducement can be transferred from this point. All right. To this point to confirm this high, and as you can see, price did not come down to take out that inducement before creating this new high. And this new high to be confirmed, inducement has to be taken out. So where is the inducement here, guys? You need to understand this very well. So your inducement, our inducement now can be transferred from here to this point now. So this is our new inducement, and as you can see, price has already taken out that inducement, confirming this high as a valid high. So this is our valid high now in the market, 1 hour high. All right, that's our 1 hour high in the market. Now inducement has been taken. Remember, where is your last structure? This is your high in the market, and where is your low? Let's look at the low. There's a change of character here. All right, after the change of character, we need inducement. All right, so there is no inducement. So this is your low here. This is your low. I want you to understand that. This is your 1 hour low. That's your 1 hour low. Sorry. That's your 1 hour low, and this is your 1 hour high. Okay. Now, price has taken out inducement. After inducement is your DOB. So where is your DOB? Because price closed below it. Where is your DOB? Now, first of all, your DOB is this one here. On the 1 hour time frame, that is. Your DOB is here on the 1 hour time frame. I hope you understand what we are saying. Now, that's your DOB on the 1 hour time frame. If price comes to that DOB and give us any reaction, we want to take trade from there. All right. But meanwhile, that's one scenario. Now the extreme OB is here. Where is your extreme OB? Now take a look at your extreme OB here. This is your extreme OB on the 1H time frame. So this is your extreme OB on the 1H time frame. All right. So these are the two OBs we are looking at. Now, meanwhile, as price, we want to see price tap into this DOB and react off of it and gives us a confirmation. It can be chalk on your lower time frame. It can be chalk. It can be flip entry. It could be TNCP, anyone. So this is your extreme OB here. All right. So these are the two OBs we look to take trades on the 1H time frame. But remember, as price has broken structure here. All right. Now, your inducement is here. Your inducement is here. We want to see this inducement being taken out. Once that inducement is taken out, guys, all right, we want to see inducement. That is, if price doesn't come down to touch this and it takes out this inducement. If it takes it out with a candle wick and gives us TNCP, we will take price lower to this point. All right. If this point fails, then we take it to this point. All right. Now, once it breaks through this inducement, where is your OB that price can react off from? Now, this is your OB here. Take a look at this that we are expecting price to come and tap into. Now, this one is your point of interest this week. This candle wick It's your point of interest. All right. So this is the possible scenario on the 1H time frame. So meaning that we want to see price do something like this. So if price goes back higher, like this, all right, and taps on this, then we will be more than happy to take price there to go higher. I hope you understand what we're trying to say. So please take note of that. Very, very important. Very, very important. So this is the scenario both on the daily time frame and the 1H time frame of gold. Okay, guys. I hope you had value in this video. If you got anything from this video, please give us your like. We need your like. It's completely free. It doesn't cost you anything. It's just for you to give us a thumbs up. All right, when you give us a thumbs up, then the YouTube algorithm will be able to show this video to more people so that they too can gain the kind of knowledge that you are gaining watching this video. All right, now, if you are yet to subscribe to our YouTube channel, please do that just immediately and turn on the notification so that anytime we publish a new video, you can be notified about it. And we are running a promo now on our VIP community. If you want to learn to become a pro and cut short your learning curve, you can decide to take advantage of this promo. We have reduced our mentorship fee ridiculously to only $50, just $50. You can become a part of the VIP community, and this lasts only for this month of November. All right, and if you miss this opportunity, you've got to wait till the next November next year. All right, I want you to understand that. So hurry now and take advantage of it. I think it's closing on the 23rd of this month. So please take advantage of it. And if you have not joined, if you haven't joined our free Telegram channel, please do so just immediately, because right there we post high probability daily trade setups. All right, so you can become part of that family. I'm going to leave all of the links in the description. All right, guys, I see you in our next weekly Forex analysis.